Good morning, Salamat Pagi, and welcome to a fascinating world of financial crime prevention. I call it fascinating because it touches every aspect of our life. It touches every transaction that we engage in. And it's not just restricted to banking, as most of us think, it's cross-industry. So wherever there is a payment, please believe that there is a potential for crime. And today's topic is more about why the threat prevention model for financial crime needs to transform itself. And where does AI sit in the midst of all of this? And what's the future operating model? So, this is going to be an interactive session. I'm going to share some interesting industry demographics with you. At any stage you have a question, please let me know. Or else at the end of the presentation, you'll see me at the Concentrix booth outside. I'm happy to have a conversation in terms of how it fits for your set of circumstances. So we get started now. So $2 trillion of funds laundered each year. Think of it, that's more than the combined GDP of Indonesia, Malaysia, Brunei, Cambodia, and Timor. That's the scale of accounted funds that were laundered just last year. $485 billion in projected losses just in scams. So if scam revenue was a company, it would be a mega unicorn, bigger than Tesla, Visa, or JP Morgan. Almost 60% of the phishing emails or the SMSs that you get are written by AI-enabled solutions. So think of AI now working like a mega call center made up of 20,000 agents, but except that they are not real, but they are faster, they are smarter, and they never sleep. Deepfakes, I'm sure you're reading a lot of it in the newspapers and media, it gets a lot of coverage. Almost 45% of criminals use AI to create highly realistic images and videos. And earlier they would steal your data, but now they steal your face, they steal your voice. And practically it's not forgery because they are just replicating your identity. Just in case you're wondering, no, this is not the fake AI, it's me in person, but that's what they do in terms of, when they engage in criminal activities like these. So the time for financial crime transformation is now. Why? Because the next $1 billion crime will not follow traditional criminal techniques. It will be written in code and executed by artificial intelligence. Hence the need for transformation, hence the need for change, hence the need to use AI as a tissue to structure our future operating model. Now, the case for reimagining financial crime transformation is strong. It's strong because the way criminals would conduct financial crime has really matured over the last 10 years. It's also important and strong, the case for change is strong, because companies and operating models have not been able to evolve fast to the extent the criminals have had. Because all of us still, have realistically legacy operating models. So how do you marry the two? How do you ensure that you're dealing with a set of criminals who are getting smarter and smarter with each year, but our operating system that includes people, process, technology, data is not necessarily moving at that pace. So that adds to the complexity, but that also adds to the catalyst for change. This is an interesting slide, and I really like this slide. If you focus on my right-hand side, this is where it all started, let's say over the last 12, 13, 14 years, when people would, refer to financial crime, normal things that would come to us is ATM skimming, card fraud, or fraudulent documents to get loans or cash incentives, even hawala for those who wanted to, engage in some tax evasion. But look at the scale of how it has changed, with 2017 being a watershed year. We are now talking of advanced typologies that span from cuckoo smurfing, pig butchering, and autonomous AI. Now, I know some of these terms may seem a little foreign to say, oh, what does this really mean? So first is typologies. Think of typologies as the ways any person would commit a crime. And a financial crime typology essentially means a particular way to commit a crime which is financial in nature. And that's primarily done because of a number of reasons. A, because you're wanting to launder money, which means that funds that you have are not necessarily coming from a legit source, and you want to convert that and place it into the system. Or the funds that you have are absolutely legitimate, but are wanting to be utilized for illegal activities, terrorism finance as an example. So that's the scale of how the typologies are moving. So if you look at the entire landscape, the people who commit the crime have moved from being simple criminal techniques to now highly tech, highly data-driven, high use of artificial intelligence, and the emerging typologies are on that scale. What does that mean for us? What that means for us is that the way we used to catch these criminals and these criminal activities have to move from manual, analog, to highly digital, high-tech, enabled by analytics, where artificial intelligence, machine learning, think of it as the tissue that kind of stitches all of this together. I spoke of the legacy environment, which I think is a real and a living fact for a whole lot of us. Specifically for Southeast Asia, cross-border regulation of financial crime is not a unified scale. Each of our countries have a distinct set of requirements. While the intent may be the same, the requirements vary, the obligations vary, and the regulations and laws have their own differences. So that adds to the complexity. Another factor which is real for financial crime operations units that is largely manual. In most of the organizations today, an investigator would get an alert. He or she would look at that alert, conduct some basic analysis, and then decide whether this is to be reported or not. So it's highly manual. There's a lot of talk around AI, and I have referred to it a number of times now. But my personal belief is your AI is only as good as your data. So if you look at running AI engines or AI solutions on your data, where critical data elements in terms of what you want to see from a customer, what you want to know about him or her, the products that he has, the transactions that he or she engages in, who's the larger ecosystem that he is sending or receiving money from, that is very, very critical. And in most of the cases, our data structures may be fragmented because we have grown as companies, we have acquired multiple companies, so that's the reality, that disparity exists. And then finally, how do you fit customer experience in all of this? So when, God forbid, if you have had some sort of a fraudulent activity on your account, and when you're calling your bank, or you're calling your telecom provider, or you're calling your support centers, the last thing you want to do is to have an experience where you feel, oh, this is not protected, or the company that I'm dealing with does not have the right controls. So I think that's very, very important. So if you mix all of this, what we are seeing currently in our operating landscape, we look at how companies are fragmented in terms of the data and IT infrastructure. And then finally, the bad actors, the criminals, in terms of how they have evolved, the need for financial crime transformation is real and is also complex and supported by these factors. So normally a question that comes up without getting extremely technical is, what are the capabilities really required to transform such a financial crime prevention practice? And what does AI really mean? Like, how do we seed AI in our operating models? How do we ensure that, it is relevant, it is factual, it is working of the data that we have, and is ultimately identifying criminal typologies? So let's talk a little about that. The future of operating model for financial crime is going to be real time, and is going to be AI native. And in the work that I continue to do with a lot of our clients, are identifying a base set of capabilities. So think of it that before we get to AI, and before AI really starts working for us, our own environment, there are capabilities that we either need to seed, there are capabilities that we need to enhance, or there are capabilities that we need to build. And those capabilities, I have outlined 24 of them, as you can see on these slides, is across 4 dimensions. Data, as I said, AI is only good as how good my data is. So establish the capabilities for data, identify critical data elements, ensuring that there is a scoring mechanism that looks at various type of customers that you have. So that's one dimension. The other dimension is human resources. The future investigators are not just going to be looking at a set of operational procedures, but our investigators are people who are going to be writing code, who would be able to detect threats, be able to tap into a variety of external databases and come up with their own assessment of whether this is crime or not. That requires training, that requires identifying the right skill, and that ensures that your people are fit for crimes that are only going to be more complex, more high-tech 2 years down the line. Strategic ecosystem. Now, this is a big word, but fact of the matter is it is so relevant. Financial crime transformation, financial crime prevention, the ability to detect financial crime and stop financial crime cannot be done in isolation. You need to speak to other segments in your organization. You need to speak to regulators. You need to engage and participate in forums like these so as to be able to get the best practices to ensure that it is a dynamic model and not just a static one. And finally, I think what's important is as you build AI, it's very important that AI is ethical. Ethical to the sense that it does not discriminate against certain type of customers, does not overlook certain transactions, is simple enough to be able to explain to a regulator, and dynamic enough such that as we continue to evolve these models, we have a set of audit trails. What was done well before, how can we improve it, and if there are changes that we need to make, the auditability ensures that it's there. So these are the 4 dimensions and the 24 capabilities. Fact of the matter is not everyone will need to build all these 24. There are companies who are on a mature scale, but a whole lot of our clients and all of us really need to enhance, I would say, 60 to 70% of the capabilities that I've highlighted here. And I made a reference to it. Artificial intelligence, sometimes to an average person, a lot of my clients ask me, what is it that artificial intelligence is going to do? So it's simple. Once you set across these capabilities, the artificial intelligence is the tissue that connects all of these capabilities. And those capabilities, as far as our people are concerned who are investigating, for our clients who are bearing the brunt of this crime, and overall for the economy, creates a set of capabilities across the life cycle. And when I say life cycle, think of ourselves. When we go to the bank or we acquire a new product, we get onboarded. And artificial intelligence ensures that as a part of onboarding, the procedures are simple. We are able to identify ourselves, we are able to provide those documents, and AI solutions ensures that it's faster, it's real time, it's compliant, and it's absolutely auditable. It also manifests itself in the way we investigate financial crime. That's the real sweet spot. So artificial intelligence will ensure that once you have these 24 capabilities, you're able to detect crime in real time. You're able to evolve your typologies or your detection frameworks to ensure that the detection is faster and you are able to stop crime, specifically in areas of terror financing where it's very, very important to ensure that you're able to identify it, report it, and thereby stop such an event from happening. And I made a reference to detection and technology. Detection, essentially, think of it as analytical rules that catch each of these transactions and are able to classify them to say, hey, these are high-risk transactions, these are medium risk, and these are low-risk transactions. So going back, set of capabilities, each of those capabilities across 4 dimensions. Artificial intelligence is the tissue that connects all these 24 capabilities. And once that is done, it creates a set of capabilities that you see on your screen that ensures that our people are smarter, faster, our customers are more happier, and our regulators are satisfied that we are doing the right thing. Now, for a lot of us, the question is, so how do we get there? How do we get started? And my response always has been that there is no need, and also it's not practical to just leapfrog into an artificially intelligence-enabled operating model. We do that in stages. And those 3 stages are what you see here. And I'll spend some time describing that. Level 1 is where we are, where most of the industry is. There are a number of transactions that happen. There is a set of team members who are looking at those transactions. They have some smarts like analytic engines, they have workflow, but it's still largely manual. That's where most of us are. I think aspirationally, over the next 2 to 5 years, 2.5 years, depending on your own maturity, you move to level 2. We are essentially looking at AI-driven alert triage. What does that mean? What that means is, sitting in 2025, if you and I are looking at 25 alerts and we feel, oh, these alerts are not real crime scenarios, we should close these alerts. But 2.5 years down the line, artificial intelligence is able to do that for us, which means we don't need to focus on alerts that have no criminal flavors. We are focusing on the ones that we really need to investigate. So that's the second step. The third step is where the detection scenarios, you remember the analytics portion I spoke about, identified transactions are real-time and intuitive, which means that based on a transaction that happens, the detection scenarios and the analytics is not just looking behind to say, oh, historically these are the 4 or 5 ways a customer has been defrauded. But based on the nature of the transaction that's happening, it is able to detect that fraud preemptively. So which means before the event actually happens, it is able to predict. One such solution like that, which you have probably heard about, is more so from a scams perspective. AI solutions now are able to say whether a phone call or an interaction is real or not based on how you're typing on your keyboard. It is able to detect that the original person, the legitimate person, types at a particular speed, whereas this is a scam environment where the typing speed is different. So that's the level, probably 3 to 4 years down the line in terms of evolution. So it's a step-by-step and a staggered approach. And the end state that you choose is essentially a function of your own risk appetite. For a buy now, pay later company, which is, for example, just floated itself, it may not necessarily aspire to get into option 3 straight away, but may choose to have an initial set of capabilities digitally enabled, ensuring that they've got the right AI models, the right data identified, and then move into option 2 and 3. However, if you are an established organization, if you're a bank, if you're a large telecom company, one may aspire to say option 3, because I have already done a fair bit of work and I want to have a unified ethical AI hub. And that AI hub for financial crime means that the wires, remember the tissues, the wires are connected to all the 24 capabilities. I have the set of functionality that I require. And now financial crime detection for me is not post the event. It is before the event and probably even as the event is unfolding itself. It's a matter of choice, it's a matter of practical viability, and it's also a function of your own risk appetite. So this is the last slide. So where do we go from here? Step 1, speak to us, because we can ensure that we can look at your current operating model. We can look at the technologies that you have. We can do an analysis in terms of where and what the journey should be. Step 2, be practical. There's specifically as an emerging technology, we have to keep in mind, I made a reference to ethical AI, responsible AI. That's a big, big responsibility for all organizations who are implementing AI, which means that you think about your data sets, you think about the solutions that you want to have. And finally, collaboration is key. And that's the reason events like this are so relevant, I'm sure, for a lot of you. What I've been talking of and the other speakers have been mentioning is striking relevance. You're saying, this makes sense for me. So collaboration is key. Engage with technology providers, engage with the regulators, and it's always good to keep an eye on new technology. So yeah, that's the end of for my section today. I'm happy to answer any questions that you have now, or else, as I said, you'll find me outside the Concentrix booth, and it'll be a pleasure to speak to you. Thank you.
Well.